Now we're going to get to the short-term view for the stock market. We looked at the SPX here as kind of a representative of the stock market as a whole. And then you can just extrapolate by other strengths and weaknesses. In Future Speak, we do bring all of the indexes, the S&P 500, the NASDAQ, and the Russell in multiple time frames with cycle analysis. So we do show that in Future Speak on Wednesdays, which is, of course, a member video. So let's take a look as we switch over. We'll leave the bond market here and go to the S&P 500. So here are your unbelievably clear cycle patterns that are in here. We'll go back to this top right over here. You can see the cycles right in here as they made their lows right at this point. That low was a little bit short of time duration at 16 days. And then they started to move out in here to lengths that were longer. A more traditional length in the stock market has been around 19 days. Right now these cycle brackets are set at about 20 days and the minor cycle at about 10 days. Minor cycles are very clear on these charts right now. Sometimes they're not. When you get a big strong upward directional component, as you see right over here, the minor cycle here did not bring you anything but a one-day dip. That shows a lot of strength. When you get that, and the clarity in these are perfect. Here's your minor cycle low right over here, and the depth of this really had me believing that the market was going to be weaker than it was. Usually when you come down and test the 78.6, you don't get back up to the new high. It's just a very low probability. Now you could see what's going on is during this corrective period right over here, where we expected the market to be falling down into the 3065 down to maybe about 3080 something right over here. It can't even tick down. So we're getting a swamping going on right over here. The upward directional power is keeping the correction from coming. There's a rotation going on even now as the NASDAQ is a little sloppy today. With Apple down on the day, they're buying other things, and the Dow is getting pushed up. So that's all rotational. That is positive as it uses up this time. And that says to us that what we're really looking at is that an early dip is likely to come. This is probably going to dip into Monday, maybe Tuesday right over here. That would be a little bit long, but you haven't really gotten anything yet here. And it's super strong. So like our target has been down, our revised upward target has been down around here about 3090-ish or so, and it barely could get down there. It couldn't hold the dip down to about 3117 here on Thursday. And now it's just today gaining a little bit of ground back. It's running out of time, and the likelihood is that you'll get some kind of a late, couple days. You could see what it did right over here the last days. You could see what it did right over here. That's the highest probability that you'll get a dip and then it'll come back up. This period over here we believe is going to be the high of the recovery, and that we're going to get into an intermediate correction after that. Our target has been that there will be a loss of some 10-12% on the downside between the peak that's made over here and sometime in August. There's no reason for us to change that. Nothing has changed. The only thing that's happening is that there's been a little lengthening in the patterns, and that has pushed out our expected low from maybe early August into mid-August, and that's perfectly normal, perfectly fine. So we're going to say that this is strong still. Early dip, then another up move that we're expecting that should high probability that it will take out this level at the high that we made right over there. That high was 3184. It's not that far from it right now, but we get the dip, it should get back up there, and then the risks really start to pick out over here. We think this is the last hurrah in line with that dip that we showed in the bond market that we think is coming also. So when all of this happens, and it all lines up on the downside, there will be a significant tone change. We don't know whether or not the effect of the polls in the market is going to be the factor in it, but we're going to see something is very likely to flip the switch and the sellers come in. It's just a very, very high probability as we get into these multiple time frames that are showing for corrective processes to be in here. So we think that not much more time on the upside. Last hurrah, intermediate patterns are topping. Some of the evidence says that late July into mid-August has a significantly increase of risk on the downside. And we're going to hold to that because it is the highest probability. That is a look at the short-term view for the stock market.